matter what I thought I was going to ask you first today when we started this interview, there's only one question, and that's retail sales. Down nearly 15% last month, up this month nearly 18%. Were you surprised?
I've felt strongly that after severe contraction for the first couple of months, first half of this quarter, that we probably bottomed out in sometime in early May. And so we expect growth to continue to the end of this quarter and into the third and fourth quarter. And I think the surprise in the jobs number and strong retail sales is part of that narrative. So we're gonna grow pretty strongly from here.
So let's dig more into what you just said. Is this going to be perhaps a faster recovery than a lot of people have been looking for, including people at the Fed?
It's possible. There's downside risks to the recovery, and there's upside, and a lot of which it's going to be, in my view, at this stage, is going to have less to do with monetary and fiscal policy and a lot more to do with how effectively we execute the healthcare policies. Wearing masks, testing, contact tracing, that encourage consumers to have confidence to re-engage in a broader range of activities. How well we do that will determine how fast we grow, but there's certainly an upside case. My own forecast for the year is that we'll end the year with about a 4.5% to 5% contraction and an unemployment rate at 8% or more. And again, there's downside risk to that forecast, but how well we do the healthcare policies will be a big determinant of how fast we grow from here.
When you look at Texas, where there's been the increase in cases in Houston, in Dallas, in Austin, what are you seeing there, though? Because I'm wondering, May, the reopenings were barely beginning in a lot of places, so it's hard to say how much, we got out of retail sales from that. On the other hand, when I look around my neighborhood, I see a lot of people wearing masks. I see people going to the grocery store regularly. Is it possible that even before we're sure everything is tested and nailed down, that people are ready to get out and live and work and get on with it?
So what I'm seeing here, and I'm out every day and trying to pay close attention, not only firsthand, but talking to contacts all throughout our district, people are ready. There's no question. There is a pent-up need to get out and to re-engage. And we're seeing that. We also knew that as people re-engage, there was a risk that there would be a resurgence in cases. We're seeing that. The thing we're watching is it's such a resurgence that it threatens to overwhelm the healthcare system. And in my view, we're not seeing that. So people are very enthusiastic about re-engaging. My concern is, after having extensive conversations, though, with consumers, with businesses, small, medium, I think there's a limit to how far they'll go if they don't have confidence in the healthcare procedures. So what's an example? We're seeing, based on TSA data, that we're improving in terms of people willing to fly, but it's still way off from a year ago. And so I think we're going to grow. People are going to re-engage. The question is to what extent, and that's what we're going to learn.
What would you have to see at the end of the summer? You said this week in another conversation that you want to see how the summer goes before you make up your mind about what needs to be done next. What would you have to see? Again, I'm kind of asking this off the back of this encouraging economic report, a couple of them, right? To say, well, maybe we don't need to do as much as we thought. Maybe we don't need as much fiscal stimulus as we thought.
I want to keep an open mind. And what am I looking for? I want to see, we're watching very carefully this so-called high-frequency data on mobility and engagement. That's cell phone indicators of whether people are taking trips, what the length of the trips are out. I want to check what engagement is at retail. I want to see what's going on with small businesses. We want to see whether people are flying more. All those indicators that suggest whether the consumer is re-engaging. And we'll get a couple of jobs numbers between now and the end of the summer. I expect those to be strong. And then we'll update our forecasts and see what we think the prospects are for the remainder of this year and into next year. And at that point, I think we'll be in a better position to judge what we do from here and what's necessary. But in the meantime, I want to give the healthcare practices and the consumer a chance to reengage and to see how far this reopening can go.
So, looking at the SEPs, the Summary of Economic Projections, and the dot plots, which suggest the vast majority at the FOMC say no rate hikes through the end of 2022 based on what we see now. But when you look at that, you have to ask yourself, well, if that's the case, if you can't meet your objectives with all of this stimulus in 2.5 years, does that mean right now the Fed should be doing more?
Yeah, so we have an unprecedented amount of monetary policy action, as you just noted, as well as fiscal policy. Even with that, as I just said to you, my base case is we're going to end the year with an unemployment rate of 8% or more, and we'll have strong growth in 2021, but we'll still have an elevated unemployment rate at the end of 2021. Now, why is that? And again, in that scenario, I'm assuming we don't have a vaccine until sometime late 2021. Okay, so we're going to have to live with this virus for some extended period of time. And I don't think it's a lack of monetary policy, and I think we'll need some additional fiscal action. But I think even with that, again, that it's the healthcare issues, it's the willingness of consumers to reengage broadly that I think will be the impediment. And then there's a second issue, which is even when they do fully reengage, some of the jobs that people have lost won't be there to go back to, or either because their businesses have resized or the nature of the industry has changed, that the jobs aren't there. And there's going to be a little bit lengthier process for consumers to get back and find jobs either at another firm or even in another industry and another function. And that's going to be a function of some things that take more time, like job retraining and other frictions that may take a little while. And yes, there are targeted fiscal actions, in my view, and appropriate monetary policy that would be able to help with that. But we're going to have to assess all that as this unfolds.
Well, I'm glad you raised that point, because I think when you start wondering if the Fed's toolbox is getting empty, because you're doing unlimited QE, you've got the key rate near zero, all these special lending programs, and yet it seems either you have to use those tools more or add new ones. But you raised the fiscal policy angle, and I think this question of, as this recovery continues, there may be a point, where you plateau. What do you do then? What do you do then when small businesses, a lot of them are gone, and people are still unemployed? Is it going to mean more government spending? Is it going, because the Fed can't control these things, and the Fed certainly has little to do, if nothing to do, with retraining workers.
Yeah. So just to be clear on your first point, we've got plenty of capacity on monetary policy. That isn't, our toolbox is not bare at all. We have lots of capacity. We've only used a fraction of the money allocated for these so-called 13-3 programs. We've got a lot more capacity if we need it, and we obviously have the ability to do additionally asset purchase. So we've got plenty of dry powder if we need it. But I think some of the frictions and some of the challenges that we've just talked about, retraining is a good example, where that's got to have to be done by junior colleges and business leaders locally across the nation. I think, in addition, there could be some targeted fiscal measures that will help those who are still unemployed. There could be targeted fiscal measures that would also help state and municipalities because of the loss of tax revenue they've suffered, to make sure that they're not cutting back while we're trying to improve the job situation. Those are some examples of fiscal policies that could help. And then, yes, there are other policies, fiscal policies, that could be targeted and provide stimulus. I think the issue is not that we won't have enough ability on fiscal and monetary policy. I think a constraint we're going to have to live with and execute well, and maybe better than we are, is the healthcare policies.